Hello and welcome to this TIOmarkets webinar on entry and exit levels with the use of technical indicators. And for the purpose of today's webinar, we're going to keep it to some fairly simple technical analysis in order to find some entry and exit levels for you to be able to trade. So, first of all, thank you for joining us today. My name is David Hannigan. I'm the chief dealer here at TIOmarkets, and I've been trading in the markets for over 30 years, predominantly in foreign exchange, and have personally used a lot of technical analysis in my own trading over the years, and I've always found it very useful. Even when I'm sort of trading fundamentals, I use trend lines to help me, or trend lines, support lines, resistance, etc., and various chart patterns to help me choose where I get in and out of trades, both where to place stops and also where I place take profit orders as well. So today I just want to quickly look at some trend lines, just go through exactly how they're formed, what that means. Then we'll look at a couple of specific examples of how to trade a trend line that is holding, a trend line that ends up breaking, and then we'll look at some resistance and support lines, again, show you exactly how they're formed, why they're formed, and then give you an example of how to trade a line of resistance, how to place orders depending on the style of trader you are, and then we'll conclude at the end as the benefits of using technical analysis to assist with your day-to-day trading. So, trend lines. What is a trend line? A trend line is a charting technique where a line is added to a chart indicating the trending direction of a specific asset or market. To construct a trend line, you simply draw a straight line that connects higher low price points or lower high price points, depending on whether it's an ascending or descending trend line. This type of technical analysis helps cut through the noise of minute-to-minute price action and helps define where a price might go. We're looking at a specific trend over a period of time, rather concentrating on the noise and the sort of minute-to-minute price action. Support levels are where prices rebound higher on multiple occasions, more than 3 to be considered significant, and resistant levels are where prices rebound lower on multiple occasions. Again, more than 3 is good to be considered significant. Traders like to use these lines to place limit orders ahead of support and resistance, and also to place stop loss orders on a break of these lines. Momentum traders like to trade breaks, leaving a stop entry order on a break above or below a trend line. So let's take a look at a support trend line that thus far has been holding. We can see here in front of you, hopefully you can see it fairly clearly. We have a 4-hour Ethereum chart. You will notice in today's webinar, all my charts are crypto. No particular reason for that, but they are anyway. It doesn't matter what the asset is. This applies. You could be looking at the price of oil, any FX pair, equity markets, etc. All of this technical analysis that we look at here will stand good regardless of whatever the asset is. I just happen to pick some crypto charts here for you to look at, but again, it could be any asset. So what we see here is we have this upward trending line here, where we have, theoretically we have 1, 2, 3, 4 touches. So that's more than the 3 I mentioned before. So that makes it a fairly significant trend line, and we have higher lows. So we get to move up, then we get to move down, but these lows are getting higher on each occasion. Okay, so this low here is this low here is higher than this low here. This low here obviously is higher than those over here, and again we have this low here, which is higher still from this one. So that's what we talk about when we talk about a series of higher lows. That's what actually gives us this trend line. Okay, and just in general terms, not specific to this example, but the beauty of looking at technical analysis is it's something which everybody can look at. It doesn't matter whether you're a sole trader sitting at home in t-shirt and shorts with a couple of hours on your hands just trading small amounts, or whether you're an asset manager working on Wall Street with $20 billion under management. We all have charts and access to it. We're pretty much all going to have the same price data. Yes, okay, maybe your chart package isn't quite as advanced as the asset manager on Wall Street, but when it comes to the price data and being able to draw very simple lines of support and resistance, and trend lines, etc., you can pretty much do exactly what they do, and that is the beauty of it. Everybody sees the same thing. Now, not everybody interprets it the same way, but many people will do. So there's going to be a lot of people out there when they look at a trend line that we have in place here. They're going to look for a level to buy ahead of that trend line because they want to capture the trend. So they want to capture a dip down towards that line in the view that it's going to hold. They're going to buy a dip and the hope that it obviously bounces back up, similar as it has here. Bought this dip, went up to here, bought this dip, it's been up to here, and obviously hoping for a similar price action here as we approach the trend line again. It is natural to expect in a situation where you do have a upward trending support line like this, that you will find buy orders, limit orders ahead of this line where traders want to get into a position to capture that trend. And then conversely, you're going to find there's going to be quite a lot of orders, stop loss orders, sell orders below this line, okay, because they're going to say, okay, the trend line's broken, I don't want to be long anymore, I need to get out, and they're going to place their stop loss orders below the trend line. Conversely, you also have what I just referred to before, actually, as traders like trading breaks. I classify them as momentum traders, and what you would see there is you're going to have a trader which is going to say, okay, I'm not really interested in trading this above the line, but what I really want to capture is when this trend line breaks. Okay, I want to jump on the move as quickly as I can do when it breaks, because I know there's going to be stops below the line. So I'm going to leave a stop entry order below the line to sell, to get short, in the hope that it comes down, and I'll leave a stop loss order above the line to stop myself out of that position if we get a quick move below it and then back through it again. Okay, so that's the two different ways of really looking to play it. You either buy ahead of the line with a stop below, or you wait for the line to break, sell, leave a sell stop entry, and then leave a stop loss back above the line if that move should prove to be not successful. What I can't give you here are the magic numbers. Where exactly do I get in? Where exactly do I get out? All I'm saying to you is above and below the line, right? Everybody's trading parameters are different. People have different amounts of money they're willing to risk, different risk reward ratios, how many points they're looking to pick up on a take profit, and how much they're willing to risk on actually being wrong on a position. My own methodologies, I always try to make 3 times what I'm willing to lose. So if I'm willing to lose 10 points, I should be looking to make 30 points out of it. That's just me. That's up to you to put your own disciplines in place. So that's why I can't really tell you exactly the levels to put it in. All I'm showing you here is how to use these lines in terms of how to get in and out of a trade, by placing above the line with a stop below the line, or vice versa if you're looking to trade the break. Where exactly you place it is going to be down to you. So that's the support line. Now we've gone to, excuse me, my mouse is a little sensitive today. Okay, so that was an upward trending support line. Here we have a downward trending resistance line. Okay, so we're going from up here to down here. I have a daily Ripple chart. How about that? But not too many of you looked at a daily Ripple chart. Again, the asset doesn't matter. This is applicable to any asset class really you're trading. It's just the type of chart we're looking at here, and the specific analysis we're looking at. So here we can see we have a downward trending line. We can see we've started off up here with a price above $1.40. We've touched once, we've touched twice, almost 3 times, 4, 5. Here we've got multiple touches here, and then finally we get this snap above. So if you're somebody that really wants to trade against that resistance line, what you would do is you would leave an entry order to sell ahead of it. Okay. Now, the one thing you have to be very careful with when you're looking at trend lines and stuff is if you leave an order to sell ahead of it, just bear in mind that over time, this trend line is moving lower. So if you're looking to sell ahead of it, what might have been okay here to leave, an order to sell at 120, if you didn't get filled, which you wouldn't have done, you come over here, you're now moving, a month forward, leaving an order to sell 120. Obviously, that's way above the trend line now. So you need to keep a close eye on how that trend line develops in order to, where you want to place your order ahead of that trend line. Because as it continues to move down, you're going to need to move your order down too. Otherwise, it will become somewhat obsolete. So, just keep that in mind, especially when you're looking at the longer term chart. But anyway, so you will look on here to sell ahead of the line with a stop loss above the line. And again, if you're a counter trend type person, you're a momentum trader, you're looking to trade that break, you're the one that wants to leave a stop entry order above the line, hopefully catch a sharp move higher with a stop loss below the line. Now, again, you need to be able to adjust that order, because obviously if you're leaving a stop loss order above the line here, let's say when we were trading here at 120, you think, well, if it breaks here above 130, let's say above 131, I want to get long. Okay, that's fine. It never happened. But obviously, as we move forward here, 1 month, 2 months, 3 months, 4 months, leaving an order up here at 131 is now completely obsolete, because we've moved all the way down to 25 cents. So you do need to be proactive in terms of making sure that if you are looking to buy a break, keep your order relevant as the price goes down. If you want to buy a break above that line, you're going to have to move your stop entry order down also. But let's say you did that and you captured this move here. Obviously, you're going to be pretty happy because you got to move above here. Who knows where you actually left the stop entry, but let's say you left it at 30 cents or 32 cents. This thing here shot up to 75 cents. So you're pretty happy. You got a very, very sharp break. And that's what we look for when we get a break of a long-term trend line. Now, this is really a long-term trend line because it's a daily chart and you're going from February all the way through to what looks to be like the middle of September. So, you've got a good 6 months worth of trend there, which is suddenly broken. But, simple terms, you want to trade that trend line, you need to leave a sell order below the line and then a stop loss above it. If you're looking to buy the break, you leave a stop entry buy above the line with a stop loss below the line. And again, the exact levels are going to depend on your own risk appetite and your own parameters that you like to use. Next, we are going to look at lines of resistance and support. And, probably I should have put this first, but I didn't. So we're going to get it second. But lines of resistance and support are really the simplest and most common form of technical analysis. Support is a price level where a downtrend can be expected to pause due to a concentration of demand. As the price of an asset drops, demand for that asset increases, thus forming the support line. Similarly, a resistance is a price level where an uptrend can be expected to pause due to a concentration of supply. And as the price of an asset increases, supply for that asset increases, thus forming a resistance line. The more often the support or resistance line is tested, the more significant it becomes. A support line is often used to play buy orders ahead of that level, with a stop loss sell orders placed just below it, and a resistance line is often used to place sell orders ahead of the level with a stop loss order above it. Now, what I have for you here, I just have the one chart. I'm using a line of resistance. Everything I say here for a line of support would be in the reverse. So here we have another crypto chart. We have Bitcoin this time, 30-minute Bitcoin chart. Again, it doesn't matter. It could be any asset class it's like. This just happens to be a good chart to prove a point. So what we see here is this faint blue line here. You can see that we have a resistance line here coming in around the 68.14 level in Bitcoin. We have one touch here. We have a second, almost touch there. Touch number 3, touch number 4. There's a couple of things I'll just point out here. When you are drawing lines of support and resistance, this like number 2 here, it doesn't have to touch exactly. It's probably not realistic when you're drawing these sort of lines, and it could be any line really, you try drawing a chart, it doesn't have to be exact to that level. It's just not going to always work that way. It's just kind of the way it is. So, but you can see there was an attempt to go higher here, and it retraced pretty quickly. So this resistance line here has 4 touches on it, which makes it a strong line. And then we see the 5th attempt here, and we've screamed through it. We've broken higher. So if you are somebody that's looking to trade against that resistance line, you are very simply leaving a sell order ahead of the line, and then you're going to leave a stop loss above the line to get out when it breaks. If you are a momentum trader, somebody who likes to trade breaks, this is going to be for you over here on the 5th attempt. You would have left a stop entry buy order above the line, didn't get triggered here, didn't get triggered here, or here, but here it gets triggered, and then all of a sudden you get this very sharp break above 68.14. First stop, well, $600 higher, and then obviously it trends higher from there. So, that's a really good way, a really good chart showing, some really good levels of resistance, and then finally breaking. How you trade it, again, is entirely up to you. What parameters you use is going to be down to you. But this shows how a line of resistance works, and it works well. And then it also shows what happens when that resistance finally breaks. People, just as an aside, and I don't have a support chart up because, as I said, it's just exactly the polar opposite of what we've just done here. If it was a support line here, you would buy ahead of the support line and leave a stop just below it. And if you were a momentum trader, you would leave a stop entry below the line with a stop loss above it. But people ask me, how do lines of resistance and support form? And just using a resistance line we have here, it's just a concentration of SAD orders placed at the same level. A little bit hard to say maybe for Bitcoin, but certainly, when you're looking at foreign exchange, you may have an institutional name, a big hedge fund, that just continually wants to sell at the same level, which means every time we get up there, we stop because there's such a high level of supply there from that particular hedge fund. It could be a corporate name. They may, they're trading foreign exchange. Let's say it's a European company that's making a purchase of a US company. Just for a simple example, they would need to sell euros and buy dollars in order to be able to fund that transaction. So they could be in the market selling consistently at the same level in order to be able to fund, what is a real flow in an M&A acquisition type scenario. So, those are the types of things that cause you to get the concentration of supply and demand at certain levels. And of course, you've also got the self-fulfilling prophecy as well, right? Because we're all looking at the same thing. So we just add to the supply at that level or very close to it, because we see it stop there. So we want to come and join the party as well, which is another reason why you tend to see these formations occur. So it's definitely a very good way to be able to place trades. The one thing I would do, just going into the conclusion here, is time horizons. If you are looking to put on a fairly short-term trade, you want to risk 10 points to make 30 points, for example. You might want to look at a 15-minute chart, a 30-minute chart, an hourly chart. Don't go looking for a daily chart. Make sure that the chart you're looking at reflects the type of trade that you're looking to put on. Doesn't mean you can't look at a longer term chart if you're looking at a short term trade, to give you an idea of some, what's happened over time. But if you're specifically looking at levels to place your orders, please make sure that the chart you're looking at is relevant to the type of trade you're putting on. Similarly, if you're trying to put on a long term trade, let's say you want to put on a trade over a month or a couple of months, and you want to make 100 points, 200 points, and or risk 100 or 200 points to make 500 or 600 points. That's fine, but again, look at the appropriate chart. Looking at a daily chart, even a weekly chart for that, might be very relevant. Looking at a 15-minute chart or a 5-minute chart probably has no relevance. So just keep that in mind. Anyway, with that, I'm going to conclude this particular webinar. We thank you for joining us here at TIOmarkets today. And if you do have any questions, please do not hesitate to contact one of our support staff, and if they can't answer the question, they will certainly get it to me, and I will endeavour to do so as quickly as I can do. Thank you very much for listening. Cheers.